person of influence, talking about a reality that we've really got to think about. And I'm actually really curious as to your thoughts. Are we heading for a recession? All right. So there are some things that I'm doing to prepare for, I'm 50-50 on the fact that the market is going to significantly take a bit of a downturn. Hang on, I've just got to try and kill some notifications here. Oh, but I can't. My system's frozen. That's no good. So I'm just going to keep talking. I reckon we got a recession coming, right? If I could control my screen. Here we go. Might actually just share my screen. Technology, when it just doesn't quite do what you want it to do. CEO survey from PwC, rising pessimism around growth prospects. We've got the Australian economy set to slip into a recession. Many are saying we're already in a per capita recession, and on and on and on it goes, especially with some of the changes that they're going to be making, certainly if Labor gets in, to negative gearing, pulling a lot of that investment drive out of the market. I'm not super optimistic, right? And so as a business owner, I essentially want to be taking some steps to be able to predict against that. And I just realized that I didn't actually share my screen just there. Did I? Did that work? Share screen? No, it didn't work. There we go. So again, the CEO survey, we've got rising pessimism around growth prospects. We've got our economy slipping into a recession on a per capita basis, and et cetera. And so there are all these kind of articles, and as I mentioned, with the negative gearing and what have you. So I'd be curious, where's your mindset at? Like, what are you doing to protect and prepare for when the market flattens? So I'll explain what I'm currently doing and what our focus is on. This might have to be a multi-part series, right? So if I'm going to switch to my top-down view, switch there, I have a crash formula that I follow, right? So C in crash stands for having a cash buffer. And then I'm going to go through the rest of them. But let me just explain. It's easy to say, oh, yeah, cash buffer. No shit, Sherlock. Like, I get that that's kind of like a bit of a no-brainer, right? However, it's creating that cash buffer which is key. So the first thing I would say to create a cash buffer is, I exist to be able to produce key people of influence, because our experience is that until you're showing up as a go-to person in your industry, everything is hard. It costs you more money to attract team. It costs you more money to attract clients. It costs you more money to retain team. Everything gets more expensive if you're an unknown fringe dweller in your industry. Being good at what you do is not enough to create the inefficiencies, right? So if you're picking up what I'm putting down around that and you're not currently on the key person of influence kind of mindset, I encourage you to check out my KPI webinar. Go to kpiwebinar.com. It's an hour and 20 minutes, and I deconstruct how to be able to stand out and scale up in your industry, creating super efficiencies inside your business. Highly, highly recommend you check that out if you haven't already. So let's get rid of that. And let me go into now how I create a cash buffer in our business. The first thing to understand is in my business started when I was 21. We were marketers. We did $1 million in year one. In year three, we did 10 million in revenue. So I'm no stranger to fast growth. When I launched my latest business, we're the 9th fastest growing company in Australia really quickly. I know how to make money. I'm good at it. I'm fast at it. I'm good at marketing. I'm good at positioning. I can bring cash in the door. I was so shit at keeping any of it. I was so good at creating value, but I was so terrible at retaining it, right? And you've probably heard the adage, growth sucks cash. And thank you, Willow, for the props. So I was really good at creating growth, but I was very bad at protecting capital and retaining profit. And I came across a methodology and approach that totally changed all that. So this is about cash buffer. And what we're probably going to do is go through the rest of the crash architecture a little bit later. If you're just tuning in, I'm curious about what you're doing to protect against what appears to be a looming recession in the Australian market, or at the very least, a significant flattening. So one thing to understand is this thing called dun, 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 Parkinson's principle. Now, Parkinson's principle says this, and it applies in a variety of areas, but I first came across it into time, right? Which will, the amount of work will expand to the amount of time available. So if you give yourself a week to complete a task, it'll take you a week to complete the task. If you give yourself an hour to complete the same task, you'll get it done in an hour, right? If you give yourself an hour to get ready, it'll take you an hour to get ready. If you've got 5 minutes to get ready, you'll get ready in 5 minutes. The same, you can experience that for yourself, I'm sure. The same principle applies to money, right? Because what most people do is they put all their money into one bank account, right? And the idea there is you're going to have money come in when you make sales, that fills it up, and then there's money going to go out in terms of expenses. And it's kind of like all your money's in that one account. This is very, very bad. Let me just absolutely make my point by eyeballing you. This is very, very bad. If this is how you're currently running your business, you must change. You will not build a profitable business. You will not build a profitable business doing it this way, I promise you. So what are we going to do instead? Well, the first thing to understand is Parkinson's principle also applies to health and food, right? So if you want to lose weight, one of the things that they found is use smaller plates, because we tend to consume everything that's on the plate, right? So if we approach that in the same way as money, we can go, okay, let's have smaller plates. So what I recommend you do, and this has come from a variety of different sources, but this works for us, is you set up 6, count them, 6 different bank accounts. The first bank account that you want to create is your income account, right? Your income account is where all of your receivables come into. However, you never ever pay invoices outside of that account. So money really only ever goes into that account. You never pay suppliers, you never pay team, you never pay anything out of that account. So just an account to receive money. That's what you'd have on your merchant facility or on your invoices or whatever it is, right? So that's kind of like an account all on its own. Then you need another account for tax, right? You can't survive if you're not paying your tax. Those bastards will shut you down. The very next thing you want to pay after tax is profit. And I highly recommend having a profit account. The next thing you want to have is a trading account. Now, trading account is actually what you pay money out of, right? So your money comes into your income account, and you pay your invoices, or you pay your suppliers, you pay payroll, you pay all your operating expenses out of your trading account. Then we have something called the vault, U-L-T. I've munched that, vault, V-A-U-L-T. And then we have the dent account. Now, the dent is about making a dent in the universe. That's all about giving and contribution, right? So 1, 2, 3, 4, 5, and 6 accounts. Okay, so you follow me? So if you've just joined, what I'm talking about here is how to be able to prepare for a recession. There's the crash formula, C-R-A-S-H. H. The first step in preparing for a crash is to build a cash buffer. The first step in building a cash buffer is becoming a key person of influence. And remember, make sure you get onto kpiwebinar.com to learn how to differentiate yourself in your industry, which creates incredibly powerful efficiencies. The next, to actually siphon cash off so you don't spend it, is to recognize that if it's all going into one account, you will never have profit because you will spend everything that goes into that account. So you're going to have an income account and 5 other accounts: a tax account, a profit account, a trading account, a vault, and a dent account. Now, we are advocates of the 1% pledge. I'm actually going to bring that up and show you that. 1% pledge. Pledge1%.org. So now I'm going to come back here and I'm going to share my screen there. Pledge 1%, right? So it was started by the team at Salesforce, but essentially it's a movement for corporate philanthropy where we pledge 1% of equity, time, product, or profit, right? Super, super cool initiative. And we've made that pledge. So what that means is if I come back to this here, what the dent account is 1%. We also want to have 5% going to our vault. Tax, our tax works out, at about 25% is what we want to allocate, and that's across the board for everything. That's GST, PAYG, company tax, super, all that shit goes into there, and 25% covers it. Then we have profit and trading, right? So what we work towards is 15% goes to the profit account, and then we're left with 55% to run the business on. Now, here's where the Parkinson principle becomes incredibly important, right? Is that if you are not constraining yourself to make your company run on a predetermined figure that allows you to pay tax, make money, store some away from a rainy day, and contribute and give back. If you are not constraining yourself by allocating money to those areas first, you will end up accidentally spending all this money from all these other sources, which means you'll be chasing your tail. Nature only evolves if a species is given environmental stresses that force it to evolve. Challenge. So by challenging yourself to run your business on this number once everything else has been paid makes you innovative. It makes you think about, holy shit, I can't afford to spend all this money on all this other shit, because essentially you're robbing Peter to pay Paul, right? Essentially you're stealing money off the tax man, you're stealing money off yourself, you're stealing money off your peace of mind, which is what the vault is for. And wow, you're not really stealing money if you're not really keen on giving it, but we believe you should be up to something beyond making money as well, and giving some away is a good way to do that. So by putting that constraint actually forces you to build a profitable business model. By forcing and constraining yourself forces you to do that. If you try and force yourself to be efficient, but all the money is just going into this one account, it will not have the same effect than if you've already moved it out. So what we do is every 2 weeks, right, I go in, the income account has ballooned over 2 weeks, so there's a whole bunch of money in there, and based on those percentages, we split that money up, and it gets paid down into those different accounts, giving me a percentage to be able to run my business on, a percentage of profit, a percentage that gets stored away from tax, a percentage that goes into the vault, which is just for my peace of mind and stability, and then a percentage for giving. This, and I'm just going to kind of come back to kind of eyeball you here for a second. This has had a profound transformation on our cash at bank. Since we started applying this methodology to our global business, we have had more cash at bank every single month than we ever have before. We are the most cashed up that we've been in far out a decade and a half. And there were some periods there where we were making big money, but we didn't understand the Parkinson principle. So that is what I highly, highly, highly recommend that you do to be able to start building your war chest. So what you do, every 2 weeks you distribute, right? Which means income goes to zero. And you distribute to tax, to profit, to trading, to vault, and to dent. Now, if you're at a position where you're running inefficiently, you might not be able to allocate 55% to trading, which means you might need to start profit, which is where we started, at 1%, right? And then trading was more, we weren't putting anything into the vault. So we had a lot more available for trading. But then every single month, we made it a mission to reduce our costs in the trading account and increase our profit. Every single month, we would increase that by 1%, our profit by 1%, by reducing our trading by 1%. And we had our team accountabilities, and it became a whole game. What you then do is every quarter, you take whatever is now in that profit account, and you can do a few things. If you're structured appropriately, you can take some disbursements as a director or as an owner or as a trustee or however you're structured, which we recommend you do. So you can take a percentage out of the business, and then you can put a percentage down into the vault of the business. So I recommend you take every quarter, you take 50% of that out, of profit out for you, have some fun. You put the other 50% back into the vault to build stability. What we find as best practice and works really well in our business is we want 3 months OPEX, operational expenses, in the vault at any given time, right? So if for whatever reason we just stopped making sales, we would be able to run for 3 months super comfortably, which, by the way, like I've been in dire straits in the past where it's like everything's about to blow up and I can fix shit in 3 weeks. So 3 months is like heaps of time, gives us lots of peace of mind. So if we come back to how to prepare for a crash, that is my architecture for building a cash buffer. Now, in subsequent Facebook Lives, I'm going to go through the rest of the methodology, but let me just give you a bit of a sneak peek right now. The next step is to rationalize expenses. And I'll walk you through kind of how we do that in a basic way, but an effective way on the next one. We then want to create assets and automation. It's really important to understand the difference between what an asset is in your business and what it is not, because having the right assets make everything cheaper, right? Which means you can get everything you're trying to get done in your business more efficiently and effectively through assets. A key here is to simplify your message, right? To create a far more focused and powerful and simple message that cuts through a noisy market. And finally, help. Now, help is split up into 2 areas to the point where I'm going to change color of my pen. So the first question is, when getting help, who can you ask? Who can you ask for help when it comes to this stuff? Can you talk to your accountant? Can you talk to your lawyer? Do you have a business advisor that's actually been through a couple of business cycles and has a strategy for this and a healthy P&L and balance sheet that's actually walking the talk? So who can you ask for help? You might realize that you could ask me for help, or my company or my team. And look, by the way, Greg's saying we're already in a recession in Western Australia. Well, I mean, technically, we're already in a per capita recession in New South Wales and Australia in general. 2 quarters of negative growth, right? So we're going there, and CEO sentiment isn't particularly great, right? So I'm picking up what you're putting down, brother. So not just who can you ask, but also who will ask you. So what I mean by that is that if you happen to offer a product or a service that may just help someone weather a contraction in the market, it's time to start thinking about that messaging. It's time to start thinking about that type of value proposition. So the way we prepare for a crash is we make sure we're building ourselves a cash buffer, which I've explained on this. And if you're just tuning in, I encourage you to go back to the replay. If you're on the replay, I'd love your comments as well. Rationalize expenses, get ruthless. And I'm going to talk about some of these in my next live coming up tomorrow. Assets and automation, I'm going to talk about those. Simplifying your message, I'll explain how that is incredibly powerful as well. And finally, not just who can you ask for help, but who is able to come and ask you for help too. So I think this is a really important conversation to have, right? Optimism is not an effective strategy for handling an economic downturn, nor is brute force sales and marketing. It's not going to weather it either. One of the things that's made us, we started our business in the middle of the global financial crisis, 2008 in London. That's when we really launched this thing, and even over the next couple of years. And the thing that has made us resilient is following that. We were born in a recession and we continue to thrive in recessions. But I think it's an incredibly powerful conversation to have because, you know, for example, if you aren't making the most of something as simple as influence marketing, right? And I define influence marketing as marketing via content that helps change and educate the way people think, so they become your ideal customers and give you a great abundant supply of inbound opportunity, whether times are good and things are booming or when things are tight, right? And so if you haven't yet jumped on kpiwebinar.com, I encourage you to, right? So for the last decade, we've specialized in producing influencers in their industry where everything in their business gets cheaper and more efficient because they're showing up as that go-to person in their industry. So if you like some of the things you're hearing me talk about, what I'm not talking about on these lives is the actual architecture of the 5 core principles: pitching, publishing, thought leadership, scaling products, raising your profile, and doing partnerships. Check out KPI Webinar for that. Doesn't matter where you are. And by the way, if you are in Sydney, let me know because I also do this as a live workshop from time to time as well. I'm just reading some of these comments. Yeah, right. So absolutely seeing some financial advisors and wealth advisors, right, really starting to protect their clients. So here's the thing. Winter's coming. It's way closer than you think. Australia has missed almost every major economic cycle for like 25 years. I don't expect that is going to last. I think a lot of the mining and the mineral type stuff that we've been doing has helped us weather some of those storms. That's not there anymore, and we certainly don't have enough Atlassian style global technology companies to help us weather that either. So I reckon we're up for a glitch or two. I want to know, what are you doing preparing for that as well? Peter, if you're in Sydney, check out kpiworkshop.com. I don't have a funny little button for that. You know what? I can do this. I can do it. I'm doing it. www.kpiworkshop. Real time, ladies and gentlemen. Bam. If you're in Sydney, you want to hear me talk about becoming a key person of influence, go to kpiworkshop.com. And I'll see you there. That's all from me, ladies and gentlemen. Hope you found this useful. If you have, help me hack the Facebook algorithm. Give me some likes, give me some comments, give me some hearts, give me all that shit. Tag some people you know in the comments. Go watch this sucker again. Crank up that. That helps the Facebook know that it should be showing this sort of stuff to more people. Do what Peter says. Do it with an exclamation mark. And if you need a Sunday workshop, you really need to come to my workshop, brother. Weekends are sacred. Sundays even more so. That's all from me. Be brave. Have fun. Let's go make a dent. I'm going to have a better one to end on in the universe. Cheers, guys.